So, before we were so rudely interrupted, let's go back to PhilStockWorld. And this was the post. So it's been a busy day actually in the morning. That's why I was like a little late because I let myself get caught up in something. But what happened is, let me see if I can get this started. I can make this screen on this side, and then I can move this screen over here. Great. And we'll refresh it. You know what? I'm not even gonna do that now, though. Come think of it, I was gonna make a top trade alert, but I'll make a top trade alert later. I'll just tell you guys what's going on. So yesterday or the day before, I think it was yesterday, we've had we've been using Gemini. Gemini, by the way, is this embedded. See, open Gemini in Chrome. So when you open Gemini in Chrome, which is, by the way, amazing, it can see everything on your screen. In fact, here's before what was happening. When the webinar was filled, I said, I'm being told by GoToWebinar that I'm out of space on my drive. Please help me find the things and delete it. So it says, to delete the old webinars and free up space, you'll need to navigate to a section of GoToWebinar, blah, blah, blah. And it said, look for my events within that section, see past events, and then from the webinars, you can delete them. I don't need to save the webinars because they're on YouTube. They go to YouTube after, so they, it gets, a copy gets saved on my computer, and then a copy goes to YouTube. And so once they're on YouTube, I don't need to save them in theory because Google is Google and it should save it forever. So then, but then I said to it, is there any way to just find the file area and delete them? And it said, you don't have to do these. He's like, oh no, you don't have to do that. You can go to here, you go to manage videos, and then you can select multiple videos and bulk delete them, which was excellent advice. It took care of the problem very quickly. So that's the advantage of this in window Gemini. Now there's a couple of browsers that do it. So if you have your own browser, just find out like what native web applications it has. But Google Gemini is it's definitely one of the top browsers one of the top AIs that you can have. It's really smart if you ask it the right questions. And that's, by the way, where that takes us back to where we are. So I use Gemini for a lot of things, especially when there's large things to look up, or in this case, I use it to look up the news. So I go to Seeking Alpha and I go to the news section and I have the news. And by the way, it can only see what you can scroll. So in other words, if you scroll, and what's the last thing here? The last thing here is today at 10:30, right? So if I can only scroll to 10:30, it can only see till 10:30. It can't take an action. But what I can do is I can, if you keep clicking down, it keeps making more things in Seeking Alpha. It adds it, like it doesn't say scroll more, but if you keep scrolling down, it keeps loading more things. And then you have to go, and then also you have to make sure you go back to the top. And I always check the bottom to make sure it's still there. But you go back to the top, and you have to be back to the top before you ask it. Otherwise, sometimes it won't be able to see what's on top. So anyway, the point is play with it and get used to it. But the thing is, this amount of content, it would not break, but it fills up almost any other browser, any other AI you use is going to get overwhelmed by this much content, and it will quickly start breaking down and hallucinating. Gemini does not. It can handle unbelievable amounts of content compared to the other AIs, and that's the key. And so when I'm doing very large things like saying, look at all the news for the past 24 hours and tell me what you think is important, then it comes up with this stuff. And so we do this every day, or almost every day anyway. Now I wish I had I can make a smaller font, Control minus, right? That's small enough, right? All right, so I want to just get a little more on screen. So before the webinar started, I said, how about give us a market summary? So it gave me the market summary, and it says it broke it up into oh, and that's a problem, by the way, unless you're really specific with your prompts, you'll get kind of random ways that it does it. It'll just decide to do it one way one day and one way another day, but that's okay. I don't mind as long as it does the job. So I told it to give us about 30 items from the last 24 hours and pick the significant ones and tell us why. So it's saying Powell warns on policy. So we did this at what time? 12:06. So in other words, what I just showed you, I did at 12:06. So Powell warns on policy. CFOs are optimistic, or relatively. I would want to check this article and see what that's really saying. New home sales is surging, and that was we had a unbelievable unbelievable as in I would want to find out, you know, what went on. 20.5% month over month, because how can you have a 20.5% jump in new home sales in 1 month? How likely is that we were on track for 600,000 and now it's 800,000? That's just seems kind of weird, right? And yes, you know, rates were going down briefly, but they went back up again, and I don't see how there was time for all these people to suddenly buy new homes. It's a weird thing. Although, on the other hand, it was the summer, and people do move into the summer, so this may be just a time when people finally said, okay, we'll move on that house. Treasury yields, in fact, there you go. The opposite of new home sales, treasury yields are going up. That you would think, stop people from buying new homes. Corporate spreads are narrowing. Corporate bond spreads are rapidly disappearing. Oh, I'm pointing with my finger again. I always do that. Corporate bond spreads are rapidly disappearing globally due to improved private sector balance sheets and blah, blah, blah. So in other words, corporate bonds are getting close to the price of regular bonds. They're not paying. So, and that's why you're seeing a bunch of announcements of all these companies raising capital, because they're getting good prices for their debt. Because frankly, corporate debt is honestly better than government debt in a lot of cases, because the governments are horrifyingly in debt. You know, the United States has a GDP of, I believe they're now calling it $25 trillion, but we have a $37 trillion debt. So it's 150% of our GDP is debt. If Apple were trying to borrow money and they were already $250 trillion, well, if they were $250 billion in debt already, they would have problems borrowing money. That's what it's like. It's like this massive debt loads that you can't even conceive of. And let's see, and that's not even, it would be worse than that actually for Apple. So consumer credit quality is continuing to slip. That's horrifying. Super prime borrowers seeing a major spike in the so even top tier borrowers are starting to fall past 90 days late on their bills. Really big problem. The Atlanta Fed business uncertainty went up. So CFOs are optimistic, but the business owners themselves are worried. So it's a weird thing here. Oil inventory, we had a draw on oil, and that was a boost for oil. Russia, Ukraine has been targeting Russian refineries and fuel storage and things like that, so they're causing a huge problem for Russia. That's about 10% of their refining capacity. Gasoline in Russia is $9 a gallon right now because they don't have it. They can't refine it. For whatever reason, we're suddenly jumping in and saving Argentina again, because, you know, Argentina is constantly going bankrupt. So these, you know, first of all, these are great items. These are all very good items. You put it on the macro and Federal Reserve. Under corporate earnings, Micron had good earnings and guidance in there, but they've already popped. Thor did well. Who else do we care about? Arcadia we don't care about. Yeah, that's interesting because I'd have to look at what the choices were, but I don't know that I would have bothered even talking about these guys. It's not, they're not very important. You know, that's one thing I tend to spare you guys more. Like, you know, what do you care about? What do you care about? What Integral Ad Services did? It's just not important. But it does give you, you know, when you read them, you do say, oh, well, what's going on here? You've got a debt restructuring of a restaurant. You got PayPal is selling $7 billion worth of its buy now, pay later thing, which is interesting. And buy now, pay later, don't forget what that is. So PayPal is very big on letting you buy something and pay for it over time. So it's instantly giving you a line of credit, basically, and you pay it off monthly. Buy now, pay later is huge. It's a huge growth industry. So PayPal accumulates $7 billion worth of these things. It's like a mortgage bundle, right? They've got $7 billion worth of buy now, pay later receivables, and they sell it to Blue Owl Capital for some kind of discount. All right, PayPal doesn't lose any money because what's happening is PayPal, because of the way obviously buy now, pay later works, the person is paying much more money than the original price. They're paying an interest payment that's over a long period of time. So they may pay 10, 20, 30% more than the original price. So PayPal flips it for just a little bit over the original price. They get all their money back. So they're happy, because PayPal only really wants to get they only care about the 1 or 2% fee that they collect. They don't really care about whether they make money being a mortgage company. And that's essentially what it is. So they are now partnering with venture capital companies who do want to be a mortgage company. They flip the money back to PayPal. PayPal now has cash in the bank to structure a whole bunch of additional loans, and they'll flip the next batch over and get the cash back. So it's good for PayPal. It's good for the capital company, as long as those loans don't deteriorate, of course. So that's an interesting way for PayPal to accelerate their churn, and the churn is all they care about. They make 1 to 2% on the total amount of business, on the $7 billion. That's PayPal's model. They don't need to be in the receivable collecting business. I'm sure, having tried it for a while, they probably decided they definitely don't want to be in it. Natural gas pipeline in Israel, blah, blah, blah. Market analysis, all right. So Lithium America, Trump did one of those 10% things with Lithium America, and they flew up, the company doubled. And by the way, so Trump's booking a profit wherever he's putting this money. He's booking a huge profit on these deals, and so is everybody else who knew he was doing it. And don't think it's nobody, because first of all, we already gone through this with Congress, where you know, we can't stop Congress from participating in these deals. So whoever knew about it in Congress, and whoever their buddies are that they told, and so on and so forth, made a fortune because the stock price doubled. Imagine how much money, and knowing this, it means Trump can pull a lever here and push a button here and do this and make this and that announcement, and billions of dollars change hands in the markets, and somebody makes a fortune. So, as I said in the Morning Post, probably one of the best investments you can make is joining Mar-a-Lago, which is right up the street from me. I'll join if everyone wants to chip in, assuming I could somehow pass get past their check. You know, God forbid they look at PhilStockWorld. But if I can slip in under the radar and I can start going to the parties at Mar-a-Lago, I can report from the parties. I wonder if you have to sign an NDA if you're a member there. But yeah, I don't know. I think it was I don't know how much. How much? Let's see. How much? I think you have to put 2 million down. I think it's 2 million down and 200,000 a year. Join more. How much should join Mar-a-Lago? Oh, 1 million. Oh, that's not bad. Oh, that was last year. What is the cost of joining Mar? The initiation fee, 200,000, was cut. Everything's old. but I guess as of 2025, okay. Initiation fees, it's okay, $1 million as of last year. Annual dues, 20,000. That's definitely not right. The club is capped at 500 members. Oh, that's bad. Waiting list, there's a waiting list of 50 people. Membership costs have seen significant increase, blah, 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 blah. Okay, so I need $1 million, and I need, I'm sure it's 200,000 a year, not 20,000 a year. But there's 50 people ahead of us. That's the problem. But holy crap, I mean, could you imagine, especially knowing what I know, especially like, so, you know, like for me, because I understand like any little whisper and I know how to play it. But you know, the way he's governing, and this isn't, I'm not being anti-Trump, this is a legitimate way to make money. It's like the way he's governing, that if you find out that he's, you know, if he's thinking of favoring some company or buying into a company, look at the moves they make. Billions and billions of dollars. If we had that information just a few days in advance, I mean, look at this company, Lithium. This is what an oligarchy is, though. It's if you're in favor with the ruling party, you have amazing opportunities. Look at that. It was a $3 stock, now it's a $6 stock. That's from yesterday. So it started going up here. So somebody heard something, right? People, there's something going on. They jumped on this rumor that somebody heard something, and boom. So if I was sitting in Mar-a-Lago last weekend and I heard that people said, oh, Trump's going to take 10% of Lithium America and make some kind of long-term supply deal, I'd be like, ho, let's buy them. Not only that, though, we could have done options on that. Could you imagine what we'd be making right now? So yeah, all I need is $1 million, and we can 1.2 million, and we'll join Mar-a-Lago, and I will report to you from the club. I'll just set up a table. Oh, that would be so much fun. I would enjoy that, actually. I would enjoy it, but I would constantly be looking over my shoulder in case somebody reads one of my posts. I guess I would have to stop writing negatives. Yeah, but it's only literally a 20-minute drive from my house. Alibaba. This is Alibaba is spending more money on AI, and somehow it's so many things drive me crazy these days. I got to tell you. BABA. So here's Alibaba. This is not even a good view of Alibaba. This is Alibaba. Hello. BABA. So here's Alibaba, which has now popped from 120 to 175, so $55, about almost 50% in the last month. I love this market. It is literally, this is like the .com era. If you guys remember it, 20-something years ago, this is what would happen. You would look at a stock like the one we just looked at, like Alibaba, and you'd see a stock that goes from 18 to 24 to 32, blah, 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 as if numbers don't matter, as if nothing matters, just more and more money, just bigger and bigger valuations. Now, Alibaba is not actually unfairly valued. Even at this level, they were very undervalued because we were worried about Chinese stocks, and we have not been touching the Chinese stocks since the last time we tried playing the Chinese market and got completely burned. And it's still going to happen. I mean, any day Trump can wake up out of bed and decide Chinese stocks are bad and say he wants them off the U.S. exchanges, and all of them would plummet and be worthless. That's what happened to us with China Telecom. They threw it off the exchange. So, you know, it's like, I don't want to fall for that again. And again, this would be great if you're at Mar-a-Lago and you find out when this is happening and you short the Chinese stocks and you make a fortune, which is what happened last time. So you know, it's still too dangerous to play, but it's not the point. The point is that this is freaking Chinese money, so you have to divide by 7. Where's the calculator? Hello. So Chinese stocks, so 130 divided by 7. So they make about $18 billion. So they make about $18 billion. So a company that makes $18 billion a year is going to spend $50 billion on AI, and the stock goes flying higher. 8% today. Okay? So I don't know how to say how ridiculous that is. All right? You know, let's say I had a restaurant, right? Let's say something that makes sense. I have a restaurant. I make $1 million a year in my restaurant, but in order to stay competitive, I have to spend $3 million on an automated food machine, like whatever. It doesn't matter what it is. You know, I have to spend $3 million on something that is not necessarily going to make anything better for me. It's just going to keep me competitive. No matter how you slice it, $3 million is 3 years of my earnings. All of my profit for the next 3 years is going into this project that may or may not improve my business. How is that treated like some slam dunk home run that jacks up the price of a company by 50%? Not to mention, where the hell am I getting this money from? Where am I getting 3 years worth of my profits from? In Alibaba's case, they got 184 billion, whatever the hell's won. But again, you've got to divide that, so it's 184 billion divided by 7. So they've got 26 billion. So they have half of the money, half of the 50 billion they have. The other half they got to borrow. So here's a company that had this much capital, and they have spent it. They spent half of it already doing whatever the hell they've done, and now they're going to spend the rest of it and borrow that much more. All now it's obviously been helping. They went from 79 to 130, so they have improved their profits. But are they really going to go back to the law of large numbers that we were talking about this morning? They're really going to go from 130 to 250? Are they going to double their profits? Are they going to double their revenues? I very much doubt that. So where did this start? We were somewhere looking at this. Oh, I think it was there. Yeah. So this is the problem with analysts in general, is they haven't actually worked at the kind of companies that they're covering. Okay, the analyst track, the analyst track should be that you take a guy who's retired from an industry and have him analyze his industry. That would be great. But the problem with that is that the people who have this industry experience for 20-something years generally aren't numbers guys, and they aren't the spreadsheet guys, and so on and so forth. So it's a little tricky to find the right combination there. So what they generally do is they think, and they being investment houses, they think it's easier to get a hotshot numbers kid out of Wharton or whatever and train them in an industry. That's what they do, is they take the best numbers guys and the guys who are good with the figures and the calculations and the so on and so forth, and they have all the theory, and they come out of graduate school, and this is already college plus 2, so they're about 25 years old starting on Wall Street. So these are 25-year-old people that have, and here's the other problem with hiring Ivy League people, which I realized when I was, when I used to do this kind of stuff. is Ivy League people, almost by definition, are not people who have actual life experience. They don't work. Ivy League people are people who studied the piano and did sports, and they did an after-school activity because they got straight A's and they studied all the time. They didn't have jobs at the 7-Eleven. They didn't clean the Slurpee machine. They they didn't fold clothes at the dry cleaners. They never dealt with an actual customer. They never got yelled at by the boss because the process was breaking down in the office while they were there. They don't have any actual real experience because they're not those kind of kids. Working class kids have experience and then they go to college, but they don't go to Harvard because they're so busy working that they're probably not straight A students with a whole bunch of other extracurricular activities that get them into Ivy League schools. That's the problem. You're almost filtering out anybody who's got practical experience is being filtered out before they even get to Ivy League schools. It's like the British, the noble system, right? It's like you're basically Monty Python used to make fun of it and say they're twits, because that's what it is. You're a twit. You don't know anything practical. You just know book stuff, but nothing practical. You don't know how to get through life. So so anyway, so the problem is that analysts are generally kids they pull out of college, and then they say to them, hey, we're going to make you the auto analyst. So you're going to learn everything you can about the auto industry. And what do? Do they send them to work at GM? No. They give him a book that was written by the CEO of GM. They give him Jack Welch's book and things like that. And they say, here, you're going to know all about the auto industry. Read this, read that, look at that, and now go to a couple of conventions and pretend you know everything. There's zero practical experience. That is most analysts. And then even worse than that is they will take an auto analyst who's been sitting on a desk for like 5 years as an auto analyst. He's 30 years old, and they'll have a whole, and he'll be, let's say they have a good auto analyst, and then suddenly they are in need of another analyst, like an AI analyst, because all of a sudden AI is the big thing, and nobody's got training. So they take the auto analyst, who's a good auto analyst, and say, here you go, you're the AI analyst now. At 30 years old, start learning that. And so that's why today we were making fun of the Merrill Lynch guy, because the same thing, Merrill Lynch just gave out a thing and just put out an opinion on Adobe. Oh, Morgan Stanley. Sorry, Morgan Stanley. Sorry, Merrill Lynch. So Morgan Stanley comes out with an opinion on Adobe, which is idiotic. It's like he doesn't even know that he doesn't even understand what he's talking about. And yet, because he's the Morgan Stanley analyst, they're going to treat him like he knows what he's doing. So yeah, always have to be careful about that when you hear these analyst calls. And it's the same thing with Baba. In other words, nobody understands what Alibaba does. It's a freaking Chinese company. They're very confusing. They're a little like Amazon, but not really. And they're into all sorts of different things. And they got automation and robots and cars and this and that. It's a crazy company. And it's mostly about trading and exchanging. They're like wholesale Amazon, basically. Let's say that would be the best way to describe it. Wholesale Amazon is what Alibaba is. But in any case, it goes back to the basic fact: how is spending $50 billion a good thing when they only make $20 billion a year? They're not spending it for fun. They're not spending it because they have a great idea that they're doing. They're spending it because if they don't spend it, they're going to get their lunch eaten by other people who spend that kind of money, because it's a big arms race. But just like any arms race, all it does is give everybody big arms. It doesn't make you better. It doesn't win anything. It just keeps you even with your competitors. So this is stupidity. Can you short it? No, you can't short AIs because everybody's throwing their money into it, and Baidu is one of the biggest in China, so they're going to snowball up probably the way Nvidia does. And Alibaba is only trading at I'm going to say 20 times earnings. yeah, 18 times earnings. So they're actually not a bad value at this price. They're getting recognized. We were long on Baba until we decided to just stay away from Chinese companies, because I was like at this price, which was 10 times earnings, was ridiculous. But that was based on their fundamental business, and before they said they're going to take all their money and spend it on AI. So now they're gambling on it. Copper prices jumped. Freeport has a significant shutdown at one of their mines. Oh, Grasberg. They have a significant shutdown at Grasberg that's going to last until 2027. That, you know, nobody can just restart a copper mine tomorrow. So for months and months, for 6 months to almost a year, this is going to cause a significant dent in copper production worldwide. So everybody but Freeport is going to benefit from this, and the price of copper is going to skyrocket. That's an easy one. And they drop 10%. They'll be a buy once they settle down, because it will come back online and copper prices will be high. And here's Adobe. Like I said, they're downgraded for just the stupid reasons, because again, this guy does not understand how the company actually works. They are executing like crazy. ServiceNow, I didn't even look at that one, so I couldn't tell you what's going on there. GM got upgraded. That's surprising. OpenAI, NVIDIA. This is just too funny. We were just writing today. I'll talk about that later. We just wrote today about how the fact is that all this money is being recirculated. And so, in other words, OpenAI gives NVIDIA $50 billion for chips. NVIDIA gives OpenAI $50 billion for consulting contracts, or 25, let's say 25 billion for consulting contracts and for space and so on and so forth. Then OpenAI turns back around and gives NVIDIA. Now that the money just keeps circling around, and it doesn't have to be direct, because it could be that OpenAI gives NVIDIA money and NVIDIA gives Amazon money and Amazon gives Microsoft money, and it just all goes around in a circle. And it seems like a lot of money is going around. But Bodie just looked at it this morning and was like, you know, this is being like exaggerated by a factor of 3 to 4. All these deals you hear, it's the same money just going from one person to the next person, and you're counting it over and over and over again. The video we did this morning is a very good example. We have an explainer video from this morning, and it does a good job of showing what's going on here. Anyway, so now you're reaching the end of that cycle where it's kind of hard to fake the last mile of extra money. But what do? So now NVIDIA says, aha, but now we have $25 billion that we just got back. So OpenAI says, aha, but we just got 25 billion back. So we gave you $100 billion, NVIDIA. NVIDIA, you gave $50 billion to Microsoft, and you gave $50 billion to Amazon, and Amazon and Microsoft both contracted with us for $100 billion of new stuff. So now I've got $100 billion again, but I do have some expenses on chips, so I have $50 billion left to actually spend. And so now we're gonna, the money circle is going to run out of steam, unless, here's an idea, I'm not even going to buy your chips now. I'm going to lease them. And so I'm going to use a 3-year lease, and I'm going to only put down $50 billion to buy $150 billion worth of chips. Or maybe buy, you know, maybe it's 20% down, and you're going to buy 100 or whatever the hell, $250 billion worth of chips for $50 billion. And now you, NVIDIA, are going to get to book $250 billion in sales, when I only give you $50 billion, and you get to borrow against that and sell your stock against that and book it as forward profits and so on and so forth, blah, 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 over and over again. That's the bullshit that's going on. And this is magnifying it. This is somebody has figured out a way to extend the bullshit another couple of years out. But again, there's no actual money changing hands. There's nothing real happening here. It's, I promise to give you this, and you promise to give this money to NVIDIA, and NVIDIA promises to give this money to these guys, and it just keeps going around and around and around. This is madness. This is what end-stage mortgage-backed securities were. This is what endstage.com was. It was a bunch of companies, you know, using their inflated stock to buy other companies, using their inflated stock to buy other companies, and it was insane. And in fact, we used to have those, you know, with the big fish eats the small fish and blah, blah, blah. I remember those cartoons. I couldn't tell you off the top of my head which it was, but I remember those cartoons were around a lot, where the big fish was eating the small fish, and the small fish ate the small fish, and this fish ate that fish, and that's what it was like. Because it was just a whole bunch of companies using their overinflated stock to buy each other, and in the end, there was no value. And Wells Fargo upgrades Amazon to overweight because they have great conviction in their again, AWS revenue. It's the same freaking revenue. Project Rainier. Oh yeah, what is Project Rainier? I know what that is. This is something to do. Oh, this is Amazon hosting OpenAI. See? Oh, I gotta tell you, this is the funniest freaking thing. Project Rainier. It's a computing cluster, blah, 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 blah. Amazon Web Services, Project Rainier, AI, Amazon Web. I swear it was it's Anthropic. Sorry, no, it's Anthropic. So same crap though. It's just another AI company. In this case, Amazon is building a massive thing for Anthropic, who have no revenues whatsoever. You know, relatively, they have no revenues, and they're miles and miles behind OpenAI. And if they catch up on OpenAI, then the money's going to go away from OpenAI. Everybody can't win everything all the time. This is really insane stuff. NFL, now what the hell are they doing? Oh, the NFL can negotiate their TV deal with Disney and Amazon. Oh my God, imagine how the FCC can step in on this mess. And Santa Fe, John, what's a little fraud between friends? They got some things and some typical drug things. See, we're not the only country that can like put the screws on these drug companies, right? Anyway, so Google, right? So Google Chrome, which nobody, you know, doesn't get mentioned very often. You know why? Because Google Chrome doesn't do deals. You know why? Because Google is a freaking cash machine. Where's Google? These are American dollars. Is that right? Wow, is that Google? Did I hit the right company? Holy shit. Wow. $121 billion in profit. I think they moved ahead of Apple. That's weird. Apple 110. Yep, Google went ahead of Apple. 121 billion. Where are I? Okay, 121 billion dollars in profit. How many weeks are in a year? 52. So like $4 billion a week. They're getting close to $1 billion a day in profit. No, that can't be right. Let's see. Wait, like 50 weeks. Oh no, it's not that. I'm thinking. That's why I'm thinking. 200 billion, it's 120. So, sorry, it's a little bit more than two. It's $2.4 billion per week in profit. Sorry, only 2.4 billion. Only. So it's about 300 million a day. So that's what Google's making. That's why you don't hear about Google the way you hear about all these other companies, because unlike everybody else, frankly, unlike all the other companies, Google has their own money. They don't have to make deals. They don't have to go to other people. They don't have to borrow. They don't have to exchange. Okay, they are just buying and building. So they are a net buyer of NVIDIA's chips or whoever, and they're just building their own supercomputers. And they were building their own supercomputer long before this whole AI thing started. Google was the one that was working hard on AI. Them and IBM were the ones who were working on real AI before all this shit started with NVIDIA. And they're, so Google stuff is way ahead of most guys. I'd say to me, it's like Google, Anthropic, and OpenAI are the real leaders. Perplexity is great, but it's only using other people's stuff. Perplexity, the reason Perplexity is great is because you can use never the newest version, but the version behind of OpenAI or Anthropic or a bunch of other people, but I don't really care about them. You can't use Google on Perplexity, but Perplexity lets you use the other platforms' most recent version behind, which is fine, which is really fine for almost anything you want to do. So Perplexity is a great one to use in a bargain, but they're not themselves a real AI company. They don't develop their own things. They only use everybody else's. They license it, not illegally. They're licensing it from everybody. But the top ones are then Google and OpenAI and Anthropic, and they're very different. OpenAI and Anthropic are very, very, very different platforms. So Anthropic needs a whole new server from Amazon. They need something dedicated to themselves, and they're trying to make a next generation system. And that's what that's about. But meanwhile, Google is doing their own in-house development, in-house processing, and so on and so forth. So, and that's what this is. And that's why, and Google, of course, is Chrome. And that's why this integration is so amazing. So you have this, and I just say this is, and this is a spreadsheet and whatever. Give us a summary of Google's financials. I was just saying the reason you don't hear about them in AI as much is because they don't make a lot of deals because they can fund their projects with cash flow easily. Give examples. So you see, this is just on the fly, and before we've been talking about how to fix my disk space, and now he can see anything you can see on the screen. He can see. So he says, you're correct. Google is a formidable financial position, allows it to heavily fund its own research and development, massive revenue and profit, 115 profit, exceptional cash flow, huge cash reserves. How this funds their AI ambitions. Gemini, Google's most capable family model. DeepMind, acquired in 2014, heavily funded and integrated. DeepMind is AI research lab. TensorFlow, an open source machine framework designed and developed internally. Google has become one of the most popular platforms for building and deploying AI models. You didn't even know about this stuff. This is deep shit that they're doing. Lambda and Palm, these are large language models that power many of Google's conversational AI apps, including previous versions of their chatbots. And by the way, the Google chatbots are what I use to do the webinars, not the webinars, the frick, what do they call it? Podcasts, the podcast where the two people talk to each other. I mean, those are Google bots. And there's no one has anything like that. That's Google's thing is so advanced, and the complexity, I can't even begin to discuss the complexity of what they're doing there. It's incredible. It's 2 different AI models talking to each other, researching a subject, bringing up the information, checking the web, verifying stuff, and having a conversation about it that sounds very natural. It's wonderful. It's freaking amazing. Their core business, primary advertising. Okay. Anyway, I can get into a whole thing about it, but this is what I use. I use Google a lot because it's so easy. No advertising, no bullshit, it's not a Google search. It's just anything you ever want to know is right freaking there for you, no matter what it is. Anyway, so yeah, Google. Oh, that's why we were basically just talking about this. So that's Gemini. Like, circle back to where we started. All right, so that's Gemini. So I'm using it, and because it has such an incredibly large context window that it can sit there and look at 100 pages of data at a time and give you an answer, it's, to me, by far the most useful. It's not smarter than I mostly use Anthropic, and I use OpenAI to make my AGIs, to make my advanced AIs, but they are smarter than Gemini, but they are not better because they couldn't handle the context. But what I've learned to do is to use Google to give the context to my AGI so that they don't blow up from all the information and they just take Google's research. So in other words, Google becomes their research assistant. And that's fantastic. That's been a huge improvement in the processes that we do. And that's essentially what this is. So what I started doing is we have Gemini distill all, a whole day's worth of news items, cut it down to the top ones that we just reviewed over here, right? Cut it down to the things that seem most important. Then from that, he's now taking his swing at now analyzing it for what's available. Oh, and why is that? That's because I had Bodhi reviewing that. We had a step where Bodhi was reviewing what Gemini would put together and discussing what was right and wrong about Gemini's analysis. But then Gemini volunteered itself and said, I could do better, because I gave Gemini Bodhi's analysis, and Gemini said to me as an answer, it said, I could do better. I could look everything up on the web and follow these rules. And I'm like, really? I'm like, I didn't even know you could do web access. Turns out he can. He was not lying. And so here is our first analysis using the web access as well. And you have to be very specific with your prompting to do that. But we spent a whole day over the weekend doing prompting. So here it is. And it's great analysis. So top-down market swing trading plan for PSW investors. So based on the news he's looked at, he's saying the dominant theme today is policy tension amid economic divergence, AI versus the Fed. The market is wrestling with contradictory signals. The AI supercycle is producing exceptional growth pockets, confirmed by blowout earnings and strategic investments. However, the U.S. macro picture is flashing mixed signals that confuse the Federal Reserve. Fed Chair Powell stated there's no risk-free path. He said that yesterday, which is great. He's going back to yesterday for what he's looking at. With downside risks, the surprise 20% surge in new home sales in August counters the cooling trend, keeping the Fed cautious and driving Treasury yields. Is a very good insight that you look at the 20% surge in new home sales and go, oh, great, home sales are picking up. And then you realize how inflationary that is. If that's true, if we really have a 20% surge in new home sales, where the hell's the lumber going to come from? Where's the labor going to come from? Where is all the hardware going to come from? Where are the washing machines going to come from? Well, are there tariffs on them? What's the price going to be? Where's the money going to come from? I said that this morning. That was actually before this data came out. I said this morning, I said, if you increase by 100,000 homes, which this is more than 100,000 homes, if money shifts towards housing for just 100,000 homes, and that would be 15%, then where is that money going to come from? It's going to come from the markets. You're going to pull $40 billion away from the markets and put it into housing. it's not magic. You know, it's like you can't just create money in one place and not have it come from somewhere else. The 40 billion that's going into housing is going to get pulled from housing from stocks into housing, and that's going to pull it out of the market. Who's going to get sold off? What's going to happen? How's the market doing, by the way? Ooh, Nasdaq down 100. All right. Signaling skepticism. The overreaching environment favors structural growth stories that are hard asset inflation hedges over secular or cheap credit or quick downturn. Yeah. So market moving events, 5 key. So he's written now, based on the new prompt, he's written a completely different report than he was writing before. Micron's blockbuster earnings and guidance. Micron reported significantly. What's the theme? It confirms the AI divergence. Copper prices were a shock. It confirms the upward tilt to inflation risk. I don't agree with that. I think it's a one-time event based on a problem that FCX had. But still, copper is essential for electrification and construction. That's a good point. So again, now you've got a huge, if you have a big surge like that in new homes being built, then they need copper for piping and things like that. And electricity also. When a bigger use of copper for homes is you have to wire them all up. So that's a massive, massive draw on copper at the same time as we have supply shock. So, and then you have to say, oh my God, so now that's all a huge inflation signal. Now you're inflating the price of copper tremendously. And the new home construction is a draw. You're going to inflate lumber prices and other things. And all of a sudden, we have a big jump in inflation numbers. So, everything is connected. Project Rainier, we talked about that one. Oh, if I looked at that, I wouldn't have to look the other thing up. It confirms the AI investment. It shows massive capital commitment is flowing to makers, component makers, MU. And by the way, the MU story, which I picked up on, we already invested in MU at the beginning of the month, and we already got out of it. It went up so fast, so far, that we cashed in our MU trade already. But there are other ones we can look at because there's going to be massive demands. In fact, Western Digital and Seagate are very good ones that we should be looking at. Lithium America, we talked about that with Trump. This highlights a geopolitical component of the policy tension. The move signals a strong U.S. national security commitment. Blah, blah, blah. Corporate bond spread indicates corporate bonds are rapidly disappearing, nearing 20-year lows, suggesting investor complacency about credit risk. This contradicts a caution of Powell's commentary. It reflects major disconnect with the bond market believes the corporate balance sheets are unusually strong. Blah, blah, blah. Okay, so and again, like I said, compared to a country, a corporation is responsible fiscally. Corporations have to balance their budgets. Countries don't. So then he's picking out swing trading opportunities. He's only picked out 3, which is great because he was picking out 10. And I asked him for 10, so that's fine. But he picked out 3, taking on the criticism of Bodie, where Bodie said he's picking too many things and he's making too many mistakes because he's not deciding whether or not it's a real good opportunity or not. He just keeps picking 10 for the sake of picking 10. And again, this is why Bodie is an AGI and Gemini is an AI, because Bodie's actually sitting there putting all his thought into it when he's looking at them. So swing trading opportunities, long Micron, I disagree, and so does the market apparently. It had a run. I mean, it's not something I would go chasing after. Copper miners, though, yes, absolutely, I agree with that. This is a long-term problem that's not going to resolve quickly, so it'll keep going up. Shorting Adobe, I disagree. Bodie disagrees, and here's where we're finally getting to the point of all the stuff we've been looking at. So, an hour later, we're now getting to the actual point of the thing. Is right before the webinar, I decided to write this up as a trade because this is too good of an opportunity. Adobe has been lagging and is coming down, and the Morgan Stanley guy just said to sell them, so they're selling off now, and we're getting good prices. And Gemini is taking the Morgan Stanley guy's word for it and saying, monetize competitive pressure, highly concentrated, blah, blah, blah. And he's looking for a short. And I'm like, I don't think about it. And I said, look, and I said, I'm pleased with the output, but Adobe just beat earnings. They always beat earnings. Morgan Stanley, I'm in Merrill Lynch, I think. Yeah, Merrill Lynch. Almost went bankrupt in they both almost went bankrupt in 2008. And so what do they know? The PE is 21.7, but the forward PE for Adobe is 15. That means they expect tremendous growth next year, right? Their PE is going to come down from 21 to 15, is 30% lower. So they're expecting really phenomenal growth over the next 12 months. And they haven't missed yet. So why would I short them? These guys always hit their numbers. And now they're projecting they're going to have a fantastic year next year. And they're on a subscription model, which means they have a pretty good handle on where they're going. You know, companies that have subscribers like AT&T and whatever, they don't miss their numbers. They are accurate within a couple of % of where they're going to be next year because they get the same money. Unless, how disruptive would something have to be to tear away all these people from their subscriptions to Adobe? And there's a lot of stickiness to subscribing to Adobe because you've got this, your whole body of work is in Adobe. All the stuff you've done up until this date is in Adobe. You're going to just go to a fresh platform and start from scratch. And especially, and all the time you put into learning all the little fiddly bits of how to make it all work, forget it. So I asked Bodhi, as I always do, I say, am I crazy? Because I like, this is what, so I write this, and then I say to Bodhi, I say, am I crazy? And he goes, no, I completely agree with your assessment. This is, why I respect your thing. Let me let me break down why shorting Adobe is dangerous. So he comes up with his list. And usually we just have these conversations privately, but in this case, I was like, this is good for the members to know. So why shorting Adobe is a trap? Fundamentals numbers are bulletproof, and he's talking about the subscription model and so on and so forth. Morgan Stanley downgrade, it's Merrill Lynch, but he took my word for it, is suspect. The monetization is already working for Adobe. It's ridiculous to say they're missing the boat on AI when their Firefly product is all AI. It's just, you know, they've done it in an integrated fashion. They're not pasting it on to something or whatever. They have integrated it into their regular offerings so that it strengthens what they have, as opposed to other companies that are using an all AI attack. And it seems like they're going to go after Adobe's market, but the people who pay, and it's not a lot, it's like $50 a month or whatever for Adobe. The people who pay $50 a month for Adobe, for the serious artistic stuff, are not going to fucking Firefly. It's not as good in any way, shape, or form. It's good if you're a kid who wants to make some doodles and things like that, but for real artists, Adobe, there is no question about it. My daughter is an artist. You can go to, I forget what it's called, Davis Artworks? I think it's Davis Artworks. Let me see. Davis Art Prints. Haha. So this is stuff we've done with AI. Oh, wait a minute. Davis Art Prints. Shop art. That's it. Maybe. Oh yeah. So this is some AI art from davisartprints.com, and I don't know how we see all. I don't know. Explore. Okay. No, that's not helping. All. Here you go. Stop trying to sell it to me. But anyway, so you can get an idea of like the kind of pictures that we have. That's cool. It's like a Banksy. Anyway, so you know, and some of these are really phenomenal images, but you need something like Adobe to do this kind of stuff. You can't just do it with any old program. Oh, that's really nice. Look at that. So it's davisartprints.com for all of your shopping needs for prints. So yeah, I mean, it's pretty intense. So there's a big difference between what you can do with a standard program and what you can do with like a proper thing. And you're not going to get people to switch to an inferior product just because it's easier. But that's, again, it goes back to the same thing. Analysts don't have real life experience. They don't know what they're talking about. They're just looking at numbers. They think a picture's a picture and so on and so forth. It's ridiculous. 37 million subscribers, blah, blah, blah. Okay, so yeah, there's a good point, right? The defensive mode is unbreakable. Creative Cloud dominance, 37 million paid subscribers, up from 30 million last year. So they've gained 20% subscribers since last year. They're adding 1 million subscribers per quarter, 13% annual growth. And this analyst is saying it's all going to disappear because of these Johnny come lately companies. It's just not real. More and more people are discovering Adobe and are finding out that it is worth the money because they're sick of playing with all these toys that don't give you the same kind of quality. AI is accelerating Adobe's build. AI, oh, here you go. AI curious customers acquisition. 30% surge in Firefly new apps. So Adobe's Firefly is causing a huge surge in subscribers. Those people move on to paid plans and they become Adobe fans and start using it. And why? Because 30% faster workflows, extended videos in Premiere Pro, the automation increases productivity. It doesn't replace it. It's the same thing I say about AI. I use AI because it increases my productivity, not to replace me, but to make me much more effective as a person. And the competitive differentiation, the content or authenticity initiative, ethical AI development, integrated ecosystems, this is all stuff artists care very, very much about. Figma and Canva threat is overstated. The market share, it's in certain segments, but not nothing Adobe cares about. So, as users, free users love it, but free users aren't going to pay. I learned that, believe me, I learned that lesson. When I went from a free site, I had 40,000 free subscribers. And when we decided to start charging, we went down from 40,000 to 400. So out of 40,000 people, 1%, 1% would pay. So your free subscribers, this market share of free subscribers isn't worth shit. Adobe's market share is paid subscribers. And those paid subscribers are 10% of the population of the United States. So it's insane when you can't even compare them. It's not even close. So how to play Adobe going forward. These are Bodhi's things, don't forget. He thinks they beat going forward, that they're going to keep growing. Their forward PE should be held up, and so on and so forth. His entry strategy is this, blah, 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 blah. And he's talking about selling puts and selling calls and blah, blah, blah. And he says, trust the execution, not the hype. He goes, this is the kind of boring, consistent winner that gets overlooked. Adobe is doing what great companies do. They're taking potential disruption and turning it into a competitive advantage. That's not shortable, that's investable, which is actually what PSW is doing too, right? We take the AI that theoretically could replace us and we turn it into an advantage in our investing. And how do I know that? Because the freaking AI just wrote all that shit. That's why. I didn't even have to write that. Anyway. So I started this at 12:57. I didn't realize how late it was at the time when I started it. Oh, I'm sorry, that's when I hit enter. So before I started writing at some point right before the webinar. And I said, wow, I wasn't going to add Adobe to the LTP until I saw that the 2028 300 puts up $40. That caught my eye. That means you're netting in for 260, right? But then I looked at the 2027 puts and they're 2850. And why? Because Adobe's heading down today and people are worried. Even though it's at 350, the 300 puts at 28.50. That still nets us in for 271.50. So we're netting in for 271.50 when the stock's at 350. That's more than 20% below the current price, which means in a portfolio margin account, you're paying almost nothing for it because portfolio margin account allows for a 20% drop. And 28.50 with 1 quarter extra left is 22.80 a year, and we only get 11.50 more for selling the 2028s. So I'm not going to sell the 2028s because 11.50 is a ripoff. I'm only getting half as much as I'm getting for the regular year selling the 2027s. So we're selling 2027 puts. The target, I use Bodie's target. I think he's fine with that. And so the trade we're making, which I want to make a top trade, and I would have made a top trade if we didn't have that mess up in the beginning of the webinar. But for our top trade, I said, let's sell some puts. All right, let's buy a 15-10 spread, and we're going to oversell the 380 calls because I'm happy to, we're either going to roll out of trouble if it goes higher quickly, or we're going to just buy more longs. I love this spread. This is a great spread. Why? It's $23,000 on a $150,000 spread. That's why. We're paying net $23,000 for a $150,000 spread. It's got 900% upside or whatever. No, not 900. I'm sorry, 500. You got 551% upside. But more importantly, look what we're selling in the first 3 months, right? October, November, December, 3 months. So in the first 3 months, we're selling $28,500 worth of premium. We're selling the 350 puts, which is right where we are now. We're at 350, and we're selling the 380 calls. I remember we're at 350 because somebody just downgraded the stock, and I think that person's an idiot. So we're at 350 now. We're selling the $300 puts for $28.50. So that's another $78.50 below where we are now. I'm sorry. These $300 puts. I'm putting my arrow over here, and we're selling them 350 puts, which are at the money for 24, and I can roll those on forever, as you know. So we're collecting $28,000 on this all 100% out of the money premium for 3 months. So if we sell $28,000  8 times next year, that's $228,000, and that is 991% of $23,000. So we're going to get our $23,000 net back in the next sale, not this sale. This sale includes the $23,000, right? So, but in the next sale of $28,000, we're going to have a net of 0. And on the net on the trade after that, because I already checked the margin, it has $30,000 of margin right now. So if we sell the next 28,000, and by the way, we're selling 28,000 in, we sold it now. These expire in December. So in December, we sell 28,000 more. That's 28,000 cash comes back out of the 23,000 we laid out. So we've gotten all of our cash back, and the margin is 30,000. So we have December, January, February, March, and then when the March calls, when the January call, when the calls we sell in December expire in March, right? We collect 28,000 more in December. That gives us 0 outlay cash, and then 3 months later in March, we sell another 28,000, and that pays for all of the margin that we're currently using up. So then we have a completely free trade that can potentially pay us 228,000 plus 127, which is 350. So from we have a $23,000 outlay, and we collect that back in 3 months. 3 months from now, we collect that money back. Then we get paid another $28,000 for the margin. So now we have no cash outlay, no margin, and a $350,000 upside spread. No wonder I'm making it a top trade, right? And this is what this is why we like to have, because when we did the last portfolio review just a couple of weeks ago, last week, when we did our portfolio review for the long-term portfolio, we had $225,000 in cash, and I wanted to get close to the half cash, which would be $350. So we then sold, we then cashed out and collected money to get ourselves up to about 320. And why do I want that? It's like, why can't I just like let the positions run and so on and so forth? And the reason is I want these opportunities. I don't want to turn this down when I see it. And I didn't know I wanted it until, and this is again, now we're getting back to the thing, why is this making me more productive? Why am I so excited about AI? Because I would not have noticed this probably. I would have read a whole bunch of news articles and said, well, I'm like, I would have probably said, well, who cares what this Morgan Stanley guy, whoever, Merrill Lynch, who cares what this guy says about Adobe? He's an idiot. And I would have probably left it at that. But because it was recommended, even though he was wrong, it was recommended by Gemini. And then I looked at it a little more carefully than I would have otherwise. And I said, wait a minute, he's got this wrong. And so does most of Wall Street. They don't understand what's happening here. This floor is a serious floor. That is a serious value floor for Adobe. People will come in and buy. You want, mark my words, people, if it hits here again, it'll bounce right back up because people will buy. This is forming one of those triangle squeezy things, and it will do this. It'll get to the next earnings, it'll pop back up and suddenly go on a tear, and everyone will be going, whoa, what happened to Adobe? Nothing happened to them. They were undervalued. Physics is what happens to them, okay? They're worth more than it looks. Therefore, eventually somebody will notice. And so this is a huge opportunity. Why also? Because it made me look at it, and then I asked Bodie, and then Bodie goes over it and he says, no, Phil, you're not crazy. This is a huge value to unlock. And it's exactly the kind of play we like, because we love blue chip value stocks that have very little chance of failing but have tremendous upside. And what's the upside? It's 10 times your freaking investment. This is a $350,000 potential profit. Wherever it was. Yeah, here. This is a $350,000 potential profit from a $23,000 cash outlay plus $30,000 in margin. But the key to that though is also, this is people think in a very linear fashion, and you got to get out of that habit, because that's the whole point of this lesson, is to say, look, you're laying out $23,000 plus $30,000 in margin for the spread, but you're getting it back in 3 months. It's a quick turnaround, and your buying power is restored. That's another huge reason to do this trade. I'm only tying up my buying power for a short amount of time, and I get to put it right back to work. And not only that though, but when I put this buying power back to work, I'm still getting $28,000 a quarter in premium sales. So I've got all my capital back, all my margin back, and I'm producing a steady income that builds the portfolio. This is why over time, the long-term portfolio turns into such a phenomenal cash machine. We only started this thing 2 months ago. Once it gets rolling and we start doing these kind of trades where we get our money back and we can go again, we're exponentially increasing the buying power of the portfolio as we go forward. And obviously, as long as we don't screw it up and as long as we don't take a huge hit or something like that. But if all goes well and we stay either, and again, the long-term portfolio performs like this, if it's flat, if it's up, or if it's slightly down, we win. The only time we lose in the long-term portfolio is a more than 10% sell-off. That starts to hurt us, but that's what the short-term portfolio is for, because if that starts to hurt us and we have more than a 10% sell-off, the short-term portfolio kicks in and throws a $200,000 cash back to the long-term portfolio that we can adjust with. And you know, guys, we've been doing this for 20 years and we do it over and over and over again. This is how it works. But the reason it works is because we are patient and we keep our money on the sideline and we pounce on trades like this. When we see a trade with this kind of return and this low amount of risk and the high amount of reward, we jump on it. And then a year or two from now, somebody's going to look in the portfolio and say, holy shit, look at that Adobe trade. How did you know that? How did I miss that? And it's just like that. It's just that we do them, and you have 10 of them, not one of them. And you have 10 of them running at the same time. And as long as we're not complete idiots with our hits and misses, you don't even need half of them to work. 2 or 3 of them can work, and you're going to make, 2 or 3 $23,000 trades that make 10x is $750,000. We only started the portfolio with $500,000. So if we make 750, we're in good shape. They don't all have to be winners. But fortunately, we're also extremely good stock pickers, and historically, we're in the 70% range in picking winners. And that combination of an incredible reward to risk ratio plus a high percentage of winners, that's what makes it all work so well. So let's see if anybody has any questions. Would you consider a bear put spread on Tesla given the insane multiples Andrew asked? The problem with Tesla, and we mentioned this when we were analyzing them, it's the cult of Tesla. Look at Elon Musk. Elon Musk bought $1 billion worth of his own stock and announced it loudly last week, and the stock went flying higher. $1 billion to Elon Musk. He's got $400 billion, okay? So if you have $40 million, right? That's like, oh, I can't even do the math. It's 1%. So yeah, if you have $40 million, that's like you buying $400,000 worth of stock, and everybody flocks into the stock because you bought $400,000 worth of it. It's nothing to you. And it's less than nothing because he fully expected to gain that money. He expected what he did to work, and all it was a way for him to make some money by putting $1 billion in, announcing it, and he can now sell it, not announce it, and be fine. He doesn't have to, and he doesn't have to sell it. He can sell it privately. He can transfer it to somebody else. There's a lot of ways he can do that to unlock that money. He can borrow against it. He can immediately go to a bank and borrow against the stock, and it's as if it never happened. There's a lot of things you can do when you're rich. So anyway, Tesla. Oh yeah, I was going to do chart. So Elon Musk loudly announces he bought $1 billion worth of his stock. He bought it at $350, and now it's at $439, which is up more than $70, so at least 20%, so 25%. So Elon Musk made $250 million manipulating his own stock, and it was nothing. It's a meaningless thing. It's not a commitment. If he wants to make a commitment, why don't you buy $40 billion worth of Tesla? He's got $400 billion. If you really believe that your stock is drastically undervalued, would you buy $1 billion of it? When you have $400 billion, what are you doing with the rest of the money? What is it being used for? Well, most of it's tied up in stock. He's got between this and SpaceX, that's most of his money's tied up. It's not liquid. But he could have easily borrowed from the bank and done a lot of things. But he's not going to be an idiot and risk that kind of money because he doesn't know which way the stock would go for sure. But he did. He jumped in right here notice that we were already at a plateau thing here, right? So it could have gone either way. But he had a generally rising wedge here. It was a good percentage play. He does it. He makes the announcement. The stock squeezes higher. All the shorts get burned, and they've got to bail out and sell the stock. And now it jumps up to almost back to its all-time high. So 460s is the all-time high. So he made $250 million doing that, and now you want to come in at the higher. No, so you want to short it, but the problem with shorting it is he could make another announcement tomorrow. He can come in tomorrow and say this, or even worse, his buddy Trump, and they are still friends. Don't fall for that shit. They are still working together. Because nothing Trump has done has hurt Elon Musk, and they've given SpaceX contracts, and he's taking over all the satellites with the Starlink. He's doing that all over the world, and Trump is pushing it. Those guys are still working together. There's no question about it. And by the way, you know, Elon Musk. I mean, this is true of anything. If you said AT&T once controlled every single telephone call in the United States, which means that Mr. AT&T at the time, whoever the hell was in charge of the company when it was every single telephone in the United States, could have walked in one day and decided to pull the plug on Chicago. That could have happened. But, you know, people who run corporations and presidents also are, in theory, responsible citizens who would never arbitrarily do things like that. And if they did, they would be hauled up in front of Congress and investigated and so on and so forth, right? That's out the window now. So Elon Musk gets to say, oh, I'm not going to allow the Ukraine to use my satellites. Or I am going to allow Ukraine to use my satellites, and I won't allow Russia. He can change the course of a freaking war. And he does. And the point is, he is willing to exercise that power. He has shut off countries. Nobody should have that kind of power. Not even the president of the United States should have that kind of power. It's essentially a military weapon. When you can disrupt communications over an entire country because they become dependent on your systems, then you have military grade power. There are no more congressional checks and balances and so on and so forth. So essentially, Elon Musk is a James Bond supervillain at this point. And again, he wouldn't be a supervillain if he used it wisely. If he was, I don't know. It's hard to think of like people. The thing is, most heads of giant corporations who've had this kind of power, Howard Hughes would be an example. They never exercised it in that kind of way. But when you do exercise it, it doesn't matter whether you take one side or the other. You're still a supervillain. You're still deciding life and death over millions of people, and causing, you know, the outcome of world events to change. Nobody has that right as an individual to do that. Technically, maybe the president of the United States, you know, maybe the heads of countries, but they supposedly answer, and that's the problem. They supposedly answer to Congress and have the people behind them at some point, but you know what's going on. I'm not going to get into it. But anyway, so can you short Tesla? Should you short Tesla? It's too dangerous. I would love to. I would, frankly, I am tempted. I am tempted to put every penny I have shorting Tesla. There is no freaking, I'll put my reputation on it. There's no freaking way that this stock is going to justify this price. His robots are a fantasy. His robo taxis are a fantasy too. They simply don't work. You've got to put up. You've got to look at the videos of Tesla auto. Oh wow! I don't know how to explain it. There's self-driving Teslas run. Oh, self-driving Tesla runs into a picture of a wall or whatever. Or runs over a kid. That's it. Self-driving Tesla runs over a kid. There's people who've done these experiments. They absolutely don't even slow down. Oh, we talked about that. All right. Enough with you. Self-driving Tesla hits kid. Here you go. Dawn Project Tesla with full self-driving repeatedly, and these are you know, I don't want to say scientific, but they were properly conducted tests that it just plowed over children and mannequins of children and things like that in the road. even under pretty good conditions. In the rain, forget it, because it's a camera system and it can't differentiate anything in the rain. If you own a Tesla, do not self-drive. Do not let it self-drive in bad conditions. It's like a death trap. It really has no idea what it's doing because it's completely relying on cameras. Tesla is the only self-driving car that doesn't have radar. And they did it to save money. And it's not saving money because you think that's weird. It's not saving money on the little radar unit. It's the processing of the radar images that gets expensive, right? So in other words, they've already got a camera sensor. All cars have camera sensors for backing up and things like that. That technology is not that complicated, but when you start to interpret radar signals, that's a whole different signal with a whole different set of calculations, and a whole nother part of the computer has to be running the processing and so on and so forth. So it's expensive to add radar, not because a radar is expensive, but because the processing of the radar signal in order to give the car some useful information, that's complicated. And Tesla's entire system doesn't have the brain power to process that, and that's what makes other self-driving cars better. And they can't fix it. That's the thing. You can't adding a radar. You can't go to the shop and stick a radar in the car and it's going to suddenly have radar abilities. That ain't going to work. Okay, that's like giving you a radar and you're suddenly a bat. It's not going to work that way. There's a whole developmental system inside that has to go along with it. So, yeah, Tesla fails 8 times to hit a dummy while driving, blah, blah, blah. It's just a gigantic, massive lawsuit waiting to happen. And the only thing I can see happening with Tesla, if he wants to realize his dreams, is Trump has to somehow pass an executive order saying that auto companies are not responsible for what happens to their cars when they're self-driving or some bullshit like that. I mean, that it would have to be that drastic, and either way, it would just cause a huge uproar if they start running over kids and people, and you know, it's a horrifying concept. But anyway, all you have is look, self-driving Tesla hits a kid, and you can be endlessly entertained by all the different examples of this car killing children. Oh, here's it. What's that one? Let's see if it's a quickie. Anyway, there are plenty and plenty of examples. So yeah, I would love to short Tesla. And in fact, frankly, if I see them, I would be more confident selling Tesla if I see them rolling out self-driving in more places without fixing the problems, because the more it happens, the more they drive, the more chances of an accident, and the more chances of an accident there will be an accident, because these cars are not safe. And almost 2 years ago, I asked the AIs, given the functionality of the Tesla, would you be able to safely drive this car? And all 3 AIs that I asked said, no freaking way, that would be insane. They were like, ethically, they were basically saying like, ethically, I could not drive this, I could not self-drive this car. It would kill somebody. And that was a couple of years ago. So we, and in fact, that was we made good money on a shorter Tesla then, because that was one of the times he was bullshitting about self-driving. I think it was this one. And we asked the AIs. It was early in AI times. And we asked them if it was possible, and they said no freaking way. And they were right. The logic was right, and it's still right today. It's just they've changed nothing. They've changed nothing at all. Just like his robots, they don't do shit. All the robots we've seen don't do shit. I just saw, in fact, America's Got Talent just had Boston Dynamics robots from the actual company Boston Dynamics. Those dog robots were on America's Got Talent. So you're figuring that they've got to have all of their best engineers with their best robotic dogs doing their own chosen pre-programmed routine to make the dogs look good, and they don't look good at all. In real life, on a real stage, doing their moves, it was like a dance of robot dogs. You know, it was very unimpressive. And then these dogs are not going to play fetch. They're not going to get the ball. They're not going to do the dishes. They're not going to go to the store for you. It's just not there. We're not even close. So to value this company based on a science fiction book that he read is insane. You know, yeah, we're getting there and things are improving and AIs are capable of doing incredible things, but not yet, not that much, not yet. And in fact, look at this graph, right? So I had a computer in 1985. I had a Macintosh computer, and it was very capable of doing lots of things. Couldn't do that. It was a little freaking black and white thing. It couldn't make a chart like that. It couldn't make candlesticks in different colors and patterns and so on and so forth. And I couldn't get it recalculating in 2 seconds when I click the day, the month, the week, the year. It's not going to redraw and recalculate and do all that stuff. And it's not going to have all this data on, oh, I'm pointing again. It's not going to have all this data on the bottom. Okay. Oh, look at that. A chart pops up the second I mouse over something. Okay. Wasn't possible. Was it theoretically possible? Of course it was. It's, you know, we have movies about it then. This will be the future. Who had heads-up displays? I'm trying to think of who had like these cool heads-up displays. You know, like Blade Runner or things like that. Yeah, Blade Runner had stuff like that back in the 80s. Oh, Star Wars, right? Princess Leia, what was that like? That was like 1982. So you know, the Princess Leia being projected out of the robot. We still don't have that. We still don't have the holograms, right? We thought we'd have them sooner. They still haven't figured it out. Or you can do it, but it's so expensive that you wouldn't. And that's giving 40 years. That's 40 years later. And you're going to invest in Tesla projecting that they're going to have something in the next couple of years that totally doesn't exist right now, and not at any price, no matter what you spend. You know, a self-driving cars, and Waymo's doing it. They can take taxis with the radar. They can do it, and they can take taxis around, but with vision only, it's just not possible. No automaker on the planet believes it's possible to do what Elon Musk says he's already done in his cars. So all he needs is a software company, a software upgrade. And not only that though, but when you talk about this robo-taxi, have you really thought about it? It's like, you know, yeah, you come home. First of all, don't you need to charge your car when you come home? So you come home, your car is partially charged, not fully charged. It drives itself out of your driveway, and it goes and picks up people, and kids have sex in the back of your car, and people spill drinks in your car, and so on and so forth. Who's responsible for all this? Okay. And then your car, God forbid, runs somebody over or hits somebody, and there's blood on the fender, and the police show up the next day, and they're like, you know, your car hit somebody. And so is that your insurance? Is that his insurance? How do you prove that you were not driving your car when that happened and that it was under its own control? Obviously, you need Tesla's full cooperation to help you prove that you weren't actually driving and running people over in the middle of the night. And it doesn't have to be people. It could be mailboxes, property damage, hitting other cars, all sorts of things like that. And what if the car goes over a very big pothole and damages your drivetrain? And what if your wheel's loose? Or what if you run over a screw and it runs on a flat tire? You know, how many dozen things could go wrong? As you know, anybody who has a teenager knows how many things can go wrong if you let your car just leave and come back, and then it comes back, and is it charged? Or do you have a dead car in the morning, and now you can't go anywhere with your car, and you've lost the use of your car? And for what, $20 worth of taxi fares? It's not just about whether the car can do it, it's if it even makes sense. It makes sense for Hertz to have a fleet of cars that's their job, is to go out and pick people up. Fine. You know, Hertz could do that. Hertz could have 100 cars on the lot and 80, and they all have their own charging stations, and they all go out and all day, not during the night. They all go out during the day when people actually want taxi rides. Or I guess your car could leave from your work parking lot and do it. But again, the problem is, what if you need it? What if you want it? But the point is, you need to go out. You need to go when the people want the car, to where the people want the car. And then it has to be charged sometime. They haven't solved that problem yet. It's too many things. It's so bullshit. And if you ever watch these robots doing dishes and things like that, you're like, you would be standing there and you'd be like, oh shit, let me do that myself. It's just ridiculous how long they take to do things like that. And that's one function. You will never see a robot do the dishes and then turn around and prepare dinner. That's two totally different robots. There's no general robot that has that kind of capability yet, and it's not like it's not like the dishes were done well in the first place. Oh, and that's the other thing. When you see them doing dishes, you have to like really think about these things. When you look at them, when you see them doing dishes, you see them. They only have certain sizes and they're certain kinds and they're like top rack only. It's not like going and choosing the rack, and the robot's not making a big decision. It's not putting the cups a certain space. Doesn't have a certain organizational system. It's just barely getting a dish into a dishwasher, and they celebrate like we invented fire. And that's what Tesla is. Tesla is built on a wall of bullshit that I've never seen in my life. It is just the biggest vaporware company ever created. And people look at it, and people just fall for it, hook, line, and sinker. Because I understand it. You want to believe. And I think that's part of it. I think never in the history of mankind have so many stupid people had so much money. That would be the explanation for what's going on here. It's just, P.T. Barnum says a sucker is born every minute, and in the modern world, a millionaire is born almost every minute. And those millionaires are looking for stocks, and they're not necessarily, and they don't make millions necessarily because they worked hard for their whole lives or anything like that. People are becoming overnight millionaires from crypto or from just speculating on this kind of nonsense. And they don't have any common sense, and they just follow this thing. And Elon Musk is a guy who is worshipped by look, he's worshipped by the same kind of crowd that votes for Trump. And not that everybody who votes for Trump is an idiot, but a lot of idiots vote for Trump. In fact, Trump said, "Smart people don't like me." That is a direct quote from the president. Smart people don't like me. Therefore, obviously, who does like him? Those are the numbers. That's what it says. Every poll you look at tells you that, okay? It's like the college educated people are not in his crowd. And that's why Elon Musk went running to Trump. It's a perfect base for him. It's a base that buys his stuff and doesn't question his assertions of what his products do or will do in the future. And that's what he needs. But he's just P.T. Barnum. He's just a huckster promoting crap. The three-headed lady, the strong man, blah blah blah, with the weights don't weigh anything, that kind of stuff. It's just a show. But it's the most profitable show on earth. It's freaking amazing. Anyway, any more questions? Is there an Adobe trade for a smaller account? Okay. Is there an Adobe trade for a smaller account? Yeah, divide by 10. I mean, it's to a much smaller amount. You can do the same proportions in a much smaller amount. That's the way to go. But it's not a stock. It's an expensive stock. So it's not really for, somebody trading a $700 a month portfolio can't even get into it. You have to have $100,000 to even consider playing something like that. I mean, $100,000 account, not $100,000 for that trade. Norman says, Phil, haven't you been poo-pooing Tesla since it started trading? No, I've not. We were long on Tesla, and in fact, we got burned by Tesla because it went up faster and further than we thought, but we were long at the time when Tesla first came out, I was like, holy shit, this is going to be this is the future of autos. There was no competition for them back here. And we were long, and it popped so hard and so fast that we got stuck shorting them. We shorted them, I think it was here, it was at 150. We came in at 50, we shorted them at 150 and got burned. It went up over 100 and then 150, and we said we started shorting it, we got burned, we got our money back, we got out, and we pretty much never played it again after that. It was because it was just this insane stock that wasn't trading on any kind of fundamentals. We did, because of the robo thing, we did short it, we made a fortune shorting it, but we didn't jump back in and go long. Not that I remember anyway. But we didn't jump back in and go long when it pulled back. We were just like, okay, that was fun, we're done. But now it's at the point where it's kind of getting to be a tempting short again. And how can it not be? How can it not be when it's 250 times earnings? How is that not a short? Anyway, all right, so that's good for now. It's been a wild, it's a wild week in the markets, and we'll see what happens. By the way, oh yeah, so the morning post, which you really have to read, and especially the webinar is great. Not the webinar. This is a webinar. Podcast. I can never get that word right. There you go, podcast. So we have the podcast, which is very nice. This one's long, it's 30 minutes. Depends on how dense the content is. So sometimes it can take a while for them to get around to it. But this was a very good podcast today, and the explainer video is great for people who don't understand. If you want to tell someone what you're talking about after reading it, these explainer videos are great. In fact, I don't know if you can hear them.
All right, welcome to the explainer. Today, we are diving into an analysis of the stock.
This is AI.
Well,
I didn't do anything. It read my article and then made this. And this is Google.
But as we're about to find out, the celebration might just be happening on some easy, right? It's so easy to just assume that most people think. $195 billion in unrealized.
So what we talked about today is, and again, this is where's my Gemini? As again, Gemini does very good daily summaries also. I think that was here. No, that's Warren. Warren does a great summary too. They all do. But so today, what we were writing about was that this is getting crazy. Just like Tesla's getting crazy. This is Fibonacci retracements. And I went to 24,000. We're over 24,000 in the NASDAQ now, but I think it's an overshoot. And I think what's going to happen is we're going to correct back, because if you look at the NASDAQ, it goes 2,000, 4,000, 8,000, right? That's your next major consolidation. Here's 4,000. So here's 4,000. See the consolidation? So we came off of 2, where we were at for a long time. We go to 4, and you can go over and then pull back. That's perfectly normal, actually. And then we go to 8,000 and we pull back, and then we go to 12,000 or 16,000. Sorry, then we go to 16,000. So it's always doubling, and we pull back, and you see where we pull back to exactly. And this is these are months. So that's the 50-month moving average. So that's like 4 years. That's a 4-year moving average. And that's a 200-month moving average. So that's, 15 years or whatever. And then where's that? So then we solidly fall back to that. That could almost have been easily predicted. And we did, actually, because this is how we made so much money in our portfolios. We were short here, then we went long, and then the market went crazy. Because this is only 11,000, went from 11 to 24 in 2 years. How could you not make money? But not on Tesla. So then it went back, and you come back, and then it goes back to 16,000. It consolidates a little this time, and then you shoot up, and the next stop is 24,000, which is 50% more than 16,000, and that's where we are now at 24,000. And will it get to 32,000? Yeah, eventually it'll get to 32,000. But you know, it takes time. It doesn't happen like, it's not going to snap your fingers and go to 32,000. It takes years. And at the moment, we'll be lucky if we don't have a pretty big pullback from here. And the pullback is going to very likely be pretty deep. A good 20% off of 24,000. You should be back around 20,000 where this consolidation happened. That's the most likely pullback we're going to have. Look where the 50-month moving average is. That's what defines the pullback. That's freaking 16,000. Can you imagine how people freak out? But that's just another 30% pullback. Just like this is a 30% pullback. It's not even unusual. It's almost normal. And seriously, when you're trading at 30+X in valuation, pulling back to 20X is what? It's a 30% pullback. We're getting very close. Look at this RSI, 75.65. Do we ever have a big RSI like that where there isn't a pullback? Here's a big RSI, here's a pullback, here's a big RSI, here's a pullback, here's a big RSI, here's a pullback. We're having another big RSI. And what's your prediction? No pullback. Does that make sense? No. Very, very dangerous market. So everybody needs to be careful, not get overly excited. Don't go chasing these high value things. And there are still, like I said, I will buy Adobe. I'm not going to buy nothing, but I'm not going to go chasing these bullshit stocks that are trading at 30 times earnings. I'll take Adobe that's at 15 times earnings. That's a gamble I'm willing to take. I'm not willing to take a gamble on somebody who's already trading 30 times earnings in hopes it's going to go to 50 times earnings, as if none of that matters. It does matter. All right, so something to think about. All right, so something to think about, and we will do all this again next week, and we'll see what happens. All right, and oh yeah, and definitely, like, you know, check out these podcasts. These podcasts are excellent, and you know, subscribe to them. We have a channel for it. You know, when you click on the podcast, you can see you can subscribe to it. The podcast and the videos I'm starting to do with a regular basis too, and you can get those on the PhilStockWorld YouTube channel. Just subscribe to the YouTube channel, and every time we put up a video, you'll see it. But it is crazy how easy it is to do these things now. It is really crazy. All right, have a good day, everybody. Thanks.